Alrighty, I think I am here. Are we here? Are we here yet? I think we are. Let's tune into. Let me tune in too, so I can see the chat line. And looks like it says live, so that's good. And there's the charts, and that's good. And here we come. What are we doing today? Are we there yet? I guess that's the biggest question of all. I mean, I was walking back to the computers, and I was thinking to myself, it's amazing. I can see the metals trying to lift. You can see the nervousness in the market. And the currencies are sideways. Let's put the euro up there now. Where are we? There's the mouse for that. Let's take a look at the euro. Oh, wrong page. Oh, let's open that up. Dookie Day Week. Open Dookie Day Week. There it is. And the euro kind of, I guess, in my head, if it's only 30, 40 pips or 20 pips in either direction, to me it's like an unchanged day. The markets don't have that conviction. And not only that, I was thinking as I was walking back to the computers, I was thinking to myself, nothing wrong with trading scared, but you got to trade confident too at the same time. So in other words, you can be, apprehensive, you can be nervous, you can have, concern. I guess not nervous, concern. You can have concern, but what you don't want to do is trade, without confidence. You got to have confidence. And everything I hear and I see, and then I see the action on the on the talking heads on some of the channels that I have up on the televisions around here, and I just shake my head. It's like these same people who are enormously bearish now are saying, well, you got to buy them. I don't like them. It's like, okay, yeah, I get that part. I understand it all. And so and there's the euro there. Let's get it up on. I have it on Dukascopy. There it is. There it is on the J4X. So yeah, 112.88. You can see just a little teeny bar there. It's up a little bit more than yesterday. Nothing more than that. You can see it's trying. The internals are trying here with the two different stochastics and the rate of change. And then you come over to here. Do I have that right? That's the NAS dollar. There it is right there. There is the euro against the dollar from the Chicago Quant right there. And you can see the weekly is drifting, slow and steady underneath, trying to go into a sell. You can see we've been in a daily buy on the very, very short term. And oh, let's see if we can fix these dots here. If I go like this, that'll do it probably. There we go. And so now let's widen that out so we can have a zoom up daily look like so. And as you can see, it's been in a daily buy from here, right there. And it's got a triangle thing going on there, so you start to get concerned about that. And then you can see we're challenging a weekly area here. You can see it's almost like when you look at the J4X, you can see that the three lines are playing at the bottom end of the range, like as if they've topped out. And you can see it's sideways. And then the warning that I was giving and have been giving and I've been giving for decades, literally decades. This time of the year is a sloppy time, and so you can't take the market serious. I guess in other words, there is no long-term trend confirm in this time period. In other words, if they slam the daylights out of the market, chances are it's coming back. If they take the market up strong, more than likely they're going to slam the daylights out of it, a couple of days later or a week later. In other words, this is not the time of the year to think that the money is become money in investing. That's what I mean by the money. Money in investing has conviction. That is not really happening right now. It's the opposite. Money doesn't have conviction. It's the dead of the summer. They're trying to figure out what's going on, what's the next stimulus look like, so forth. In other words, we live in a world of handouts. Trump said that the next one will be a $1 trillion cap. In other words, no more than $1 trillion, half of what the last one was. So, that tells us right there, the money, they know that it's not going to be like pouring out, being thrown away, which is normally what they want. They want to see stupid, helicopter money. That's usually the recipe of it all in the end result. So we're not going to really see a lot of that. I heard that he was talking about they're thinking like $40,000 a year in income. So just lower income opportunity. In other words, money coming in from 0 to 40,000. Businesses, they're going to try to pass legislation with it. Matter of fact, McConnell has said in the Senate that they will pass legislation that protects people from being sued because someone walked into your store or shop or bought something from you and you caught coronavirus and now you go and sue them. I mean, this is the Democrats. This is socialism. They love suing. The Lawyers Association donates dramatic amount of money to the Democrats every year because they know that they will pass legislation like that and just crush business. Because again, they don't really care about business. They'll tax it to death. That's about as much as they care. And then after it's dead, they bury it and go on to the next corporation as far as they're concerned. But that's where we are right now. So anyway, that's what my warning is again, and I'll probably be repeating it for like the next couple of weeks. This is going to be the sloppy time of the year. That's what it's supposed to be. And you can see here on the fact check sheet, bum 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 bum. 7 weeks in a buy, 5 days in a buy, and of course, 7 weeks would be 35 days plus the 3 days of this week. So if you think that's like 37 days back and that is lower than here, then obviously the math is working. All right, and especially over the last 5 days, if you think, let's see, so this is the 6th day. So if you think this area here, right there, is lower than this area over here, again, the math is working. All right, let's zip to the cable. Let's see what the cable's up to. And anybody that has a question, I don't think there's anybody here, is there? I don't see too many people here to begin with. So, but if you have use the opportunity. If you're here and no one else is here, ask away. Ask as many questions as you want. Cheaper by the dozen as far as I'm concerned. You can just ask away any particular topic. I don't care. We don't even have to look at the cable. We can look at anything else you would like to look at. I don't know, gold, oil, Amazon, Apple, the 50 STOXX, you name it. The S&P 500, the Tech 100, you name it. Blueberries, whatever. You name it, we'll look at it. If we can get it on a chart, we will look at it. Okay, so here's cable. That's line 13 right there. A week behind the euro. But on a daily basis, the same. They're both 5 full days into it, going on a 6th day. And again, if this is lower than here, let's see, 6, so 3, 1, 2, 3. So that's... yeah, that's it right there. So if this is lower here than there, if that's lower than there, then the math is working right. And same thing here with the 6 weeks. 6 weeks, 6 times 5 is 30. Add the 3 days is 33. You go back, 33 bars back. If this area here is lower than here, then the math is working. You can see it even went after it, and now it's come back up again. So it's a very clear. It became the support in there. Hey, Quad Z, what happening? What's up? It's from my old days, going to high school in the hood. What happened? What's up? Yeah, there we go. Anything you would like to ask. Ask. You can have 12 questions since nobody's here. Just ask away. Why is the sky blue? Refraction of molecules. Okay, so there's the cable. You can see this thing, and you can see on the J4X. Look at it. This thing's trying to do the. In this case here, this is like over in the euro. When we took a look at the euro with the J4X, let's do it again. You can see how it's like as if it's acting like this is the bottom. I'm sorry, this is acting like this is the top, and it's like working its way back down to the bottom again in here. Doing all this here, hesitating here, heading down, and that's that's Euro AUD. Wrong one. Right there, there it is. There, that's better. As I eat fresh blueberries, right there. Remember, it's breakfast time here in the States, so I do my antitoxins. Uh, and then you have here the cable. That's getting a little bit up higher. You know, definitely something's going on there. When you move down into the low mid 122s or high 122s, now we are dancing with the low 125s with a high of about 125.70, right around there, right? 80. So it's a overall this thing is having a nice range there. Boy, was it who asked me yesterday? I think it was like wasn't 54. Someone asked me yesterday like where could we make 500 pips? And I said, "Oh, you know, like oil, maybe the cable." And there was another one I came up with, metals, silver, maybe something like that. You know, I think there's potential there for 500, you know, a good move. We've had it in the soybeans a couple days ago, you know, and that would be the you know the areas there. Stock market. I think I've mentioned the stock market too has potential to have you know some big moves. All right. Um, if that is all, then we will go over to and take a look at what will we look at here. Let's look at the Turkish lira. See if it's still flatlining. Very strange situation there. It may, you know I want to say that the Turkish lira is a perfect example of the summer. You know, look at that. I mean, it's just telling us that there is no conviction whatsoever to do anything. And let's put it up on our Chicago quant chart right there. Look, you can see it there. Look, the time manifolds are banging into each other. If they could go through each other, they would. You know, you can see that it's as tight can be. There we go. There we are. Look at how tight that is. Really tight. And you know, it just shows you that. Now that was interesting. That was our day off in the States here, and I got you know, in some ways, I want to say, what does that tell us? The one day that the United States is closed, they spike the you know the Turkish lira. I'm not sure what that exactly means. I just know that obviously at one point someone said, you know, I need to get out or I need to do something. And somebody else went to the other side of it, obviously. And that is really what that means. I don't know how important that is or not. To me, I would say it's not. You know, it's just an illiquid day. But sometimes, just like the classic Freudian slip, in a day where the United States is totally closed, there's no trading going on. There's even the futures contracts were closed in like most of the products. Like there's no oil being traded. I don't even think gold was being traded. You know, I mean it was, you know, dead. Stocks are not being traded electronically. I mean it was dead. And someone comes in and just reaches big time for the Turkish lira. And then you can see, obviously, they woke up from that fact and fell right back into this range here. You see where the closes are right there. There's the closes. So stayed inside that range. So obviously, whoever reached in, you know, was the one that panicked. And they haven't cleaned it up as a fat finger. So obviously, it actually happened. And so it tells us a little bit there that, you know, it's like, watch out. This thing wants to go higher. And again, we've looked at this and we keep on thinking it's going to do the Turkish, they're going to do the combination. I guess it's like the triple, you know, the ruble going from, you know, 5 to now we're in the 70 area or 68 area or whatever it is. And the South African rand that went from, say, the 3 and 4 area to the, you know, 12 to 15 area. And we're seeing the Turkish lira go from the 1.5, 2 area over a 6-year period up to the 7 area. You know, so and then we also wait. One day we'll see the Chinese yuan do the same thing. It'll, one day it'll be 7, and the next day it'll be like 14, and that's why they keep that big bucket of money in the United States. Everybody's like, they keep on playing that game. We've talked about that where they, oh, we're not buying U.S. bonds anymore, and then they go and find another country to buy them in instead and hide them. So that is the one thing that really sticks out is in my head. One day the yuan will be in the teens, and they'll be lucky when it's in the teens, because I think it's going to be in the 25s and 30s, if not worse, as time goes on. They just keep that $900 billion over here just to have some American dollars to try to prop it up. Also, it doesn't trade. It's not a real trading product. You can't trade. Less than 1% of it is used worldwide. So if it wasn't for the media beating that drum all the time, the Chinese would probably have a fair chance of having a real economy. But since they support the CCP, nothing's getting done over there. All right, let's jump from there to, where are we going next? Let's take a look at, I saw the Canadian get it back into a daily buy, I think it was. Yeah, let's just take a check at that. That's line 20. Yeah, so 7 weeks in a sell, 1 day in a buy. Let's take a look at its physical action this morning. Right there. Just a tad off, isn't it? Nothing major. Quiet. You can see the white line zipping up from the lows, trying to get going. Tried to do it here too and didn't do too good a job. Let's take a look at it through the Chicago Quant. Our Chicago Quant charts. Where are you? Right there. There we are. And you can see here it's holding up in a daily buy again today with a green dot, 2 green dots in a row. That's nice. You can see the weekly has jumped through the 0 line, so there's some buying going on there. And usually we interpret that as possible weakness in oil, or Mr. Trudeau has done something bombastic. I don't know. Usually it's one or the other. For a long while, the Turkish lira and the let's see if we can do this. Let's do it on this on J4X. The Turkish lira and the Canadian seem to kind of trade in the same pattern. Talking about lira against dollar, Canadian against dollar, that type of thing. But you can see here it's kind of flatlined the same way that the Turkish lira is too. It also moved down from a top. Let's see if we can show you that one more time. Right there. Same type of pattern, except for this is really astonishing there. Let's go back to the Canadian. Right there. And so I guess, a little perk up here. Again, summer months. Warning, summer months. Matter of fact, we should have like one of those, what do they have, those lines that go underneath the TV set when you're watching on a television screen or watching any type of screen. And there's a little, they call it a something line, and it has, words going across it, titles. It should say summer doldrums. That's what it should be saying. Summer doldrums. Don't get fooled by wild action. All right, and that's where we stand with the Canadian. You can see that, trying to get rolling with the homies on the upside there. Rolling with the homies. All right, now since no one's asking any questions, I'm going to deviate off like yesterday, and we're going to go over to oil and take a look at oil to see if oil is weak. I mean, that would make sense to me, is that we're seeing some weakness in the oil, and it's probably flatlined of some form. So let's take a look at oil, see what it's done today so far. Rolling with the homies. Right there. There's West Texas. Shows a little strength here. Let's see where it's going. Wow. It's got that Turkish lira thing going on too, doesn't it? Let's see if we can remove that. There we are. I mean, it's just flatlining. This seems to have made a lower high. And, I mean, the volatility has diminished. Again, warning, summer doldrums and widen out like that. And I don't know if that's a reason to give a little charge into the Canadian, but since there's nobody around and people are doing things, other things, like walking on beaches, going to Barney's Joy, playing on the sand or the low tide sand, in the middle of the bay, that type of thing, where the billionaires are. So, oil is not doing anything dramatic, but Canadian is showing a little strength there. And we have that. Let's take a look at that. That is 9 weeks now in a buy and 6 days in a buy. Oh, man. You only can survive by Chicago quant. I swear, by quantitative trading is about the only way to survive this time of the year. And so let's put it up on here. Go to the quant. Oh, quant, where thou art our quant. That's wheat. And there is August oil. Just like on the J4X there. You can see it's doing the same thing. It's just really tight in there. August crude. And it's just flat line there on the day. The week is showing some weakness. Could be a prelude. It could be a prelude. And I guess what we could do is zip over to the NASCAD, the Loonie trade, and see what that looks like. See if there's anything there that would be identifiable. But again, warning, summer doldrums. So let's take a look at NASCAD. This is for anybody that's new here, this is our oil rendition. We look at oil, then we look at Canadian, or we look at Canadian, then we look at oil, and then we look at NASCAD pairs trade, because they all seem to relate to each other. Same thing here. It's a sideways no, that's Canada. NASCAD, where are you, NASCAD? Right there. There we go. I think it was lifting last I saw it, but here it's showing a little minus. Yeah, there was the lifting that was going on. We go to the fact check sheet, and that is line right there, line 24. 7 weeks in a buy, 6 days in a buy. So if you know numbers like 1 through 7, basically you can say that this is definitely lower than this bar right here. And again, that means the math is right. Look at the way this thing is climbing. It's almost like it's like relaxed, not excited. Like this looks excited. This is starting to look relaxed. I mean, they're starting to mirror each other to the point where there's like no real heavy push going on. Now, that normally means that oil's been going up, and obviously it has right there. And then today they're showing some weakness, and maybe that means oil will show a little weakness, and that would also insinuate that the Canadian is trying to go up in value at the same time. Now let's go. We have the oil in there, don't we? Yeah, there it is. Okay, so I just have to show you it. And so there it is again there. Okay. Oh, I know what I want to do. I want to go to the NASCAD. That's what it is, NASCAD. Let's go there. Dookie Day Week, NASCAD, towards the bottom. Right there. You can see it's trying to roll over there. You can see the histogram's starting to break down, but still all plus. All plus, and then, what is that? Bunch of days of green, that's for sure. Bunch of days of green, and it went up. Went from the 87.5 to the almost 80, up to the 89. What did it do? It got to 89.29. So that was that move there. And we've been in a weekly buy here, so obviously if this is high, this is lower right here than there, the math is right. And obviously it's for you to tell. Is that lower than this? And if so, bingo. Bingo. All right. Now, let's see. That kind of concludes the oil side. But if I get rolling along and somebody comes into the room and says, I want to know something about oil, we can look at it for you and answer any question you have about it. Or at least try. All right. Now we drift to, where do we drift to now? We're drifting to. Let's take a look at what's here. So NASCAD. So now we could go back and look at, say, Swiss, and see what the rest of the currency markets are doing, and then we can drift our way into the metals markets from there. And you can see here's Swiss just marching down, and we talked about it yesterday. Boy, are they rolling in the dough. I mean, the Central Bank of Switzerland has a wonderful portfolio. They've caught the wave, you know. They caught the, as we used to call it on the floor, they caught the the momentum. They caught the momentum, and I don't know, you know, it could be as big as 100% return this year for the Swiss National Bank. They stepped up big time in February and March, big time, and bought a lot of the FANGs, you know, the Amazon and the Apple computer and the Facebook and at bargain prices, and Netflix and Google, and they bought them at. I mean, they may have just the buys that they made in March could have doubled, or you know, is almost on the verge of doubling, and they didn't do it with little, you know, little do re mi. They did it with big do re mi. They stepped up with you know, $500 million here in a couple, like 4 or 5 of those products. We did a webinar on that, and I showed you what they reported it. They reported, you know, I mean, central banks now are very clearly active in the market every day and trading for their own portfolio, and at the same time trying to keep a balance of the rest of the action. You know, they're trying to make sure that nothing moves too far out of line. Nothing, you know, what they want is normality and stability. That's what they want. I know the biggest question of all is, what is normality? Stability, we know. In other words, something that doesn't move too much and stays in line with the way it's been previously and in the future that it could be. Now, normality, that's a different story altogether. That's probably the thing that keeps money managers up all night long now, and that's why, you know, you see like the guy from Guggenheim, you know, walking around talking about the next Great Depression, and they're still invested. And at the same time, they're saying that they're bears, and the market falls apart 33%, and they lose money. How are you a bear? Market falls 33%, and you lose money. I think you should lose your job. I think that's honest to God. I mean, what is that? You know, what we've gotten to the point now where in this country, they're handing trophies out for the idea that you actually played, or you were on the team and you wore a uniform. That's the trophy. You get a trophy just for wearing a uniform, not playing hard, not playing successful, just being there. It's like the movie Being There with Peter Sellers. So, saw the same thing with Dalio from Bridgewater, you know, losing $28 billion, walking around telling us he's a bear for the last 8 months. I'm a bear. I'm a bear. You need to sell out of this market. How do you lose $28 billion in a down market if you're a bear? I don't understand that. What it means is that they're not telling you the truth. They're not telling you that they are long, but they're scared. That's what it really means. It's like a code word. When a money manager says I'm a bear, they mean I'm scared. I'm long and I'm scared. I think that's exactly what it means. So English language is not even being used anymore when it comes to describing these portfolio managers' ideas. You know, I'm a bear, I'm concerned. No, just say I'm scared and I'm long. It'd be a lot better. The public would be happier, and you know, everybody would be, you know, moving along just fine. I guess that's how you keep your job. You walk around telling everybody you're a bear. The market falls 33%. They say, "Hey, you did it right." And then they look at your portfolio and they go, "But how come you lost $28 billion? I thought you were a bear. How come you didn't have, like, if you got $28 billion you can lose with no problem. Can't you buy, like, I don't know, a quarter million dollars worth of puts, or you know, I don't know, $100 million. If you can lose $28 billion, can't you afford $100 million worth of puts? $100 million worth of puts with a market falling at at 33%, that would probably make about 15, $20 billion. Then you could say, well, we lost not 33%, we lost 6%. That's not too bad. A little slippage in our calculation, and act like you knew what you were doing. So that's Doc's opinion about it all. All right, and kudos to the Swiss for trading the markets well. Great, not well, great. All right, there's the yen. Yen looks a little sideways action there. We'll see how it comes in. Look at it, very sideways there. And that is line 19. And you can see we are 3 weeks in a sell, 3 days in a sell, and the product is going up for a day and a half now. So we're definitely losing with that, because obviously 3 days in a sell. Let's see. So this is the 4th day. Yeah, so where that one right there is the sell. And so it has gone lower and it's gone higher, and it's sitting now right where it went into the sell. So obviously that's not doing too good there. Doc can't be perfect. All right, now let's take a look at that weekly number, and we'll do the same thing. We live and die by our numbers. We have no problems with that. So you go back 3 weeks in a sell. So there's 3 days right there. So then there's a 1, 2, 3, 4, and a 5. A 1, 2, 3, 4, and a 5. A 1, 2, 3, 4, and a 5. So you go in here, somewhere's in here, you go short. So if you think that this here, at this point, is higher or lower, at one point it was a success, and now it's a failure at this point, and we're going sideways. Now let's go to what's pretty much safely the only thing that can lead us in this crazy world, and that is a quantitative analysis. And let's go to the quantitative analysis. Let's go to the Chicago Quant, and we'll take a look at that chart. It doesn't, I'll tell you, it's screaming negatory, negatory. Watch out, Will Robinson. So it went into the weekly sell in here. You can see it did that. We were brilliant, and then we were dumb. Obviously, we went into a daily buy, so the math kept you safe, of course. But overall, the trend is sideways, oscillating like a little chicken on a barbecue, where it goes around in a circle on a stick or a rod across the fire, cooking away. And look at this. The weekly is just driving hard down. We've got 4 days of red dots, and this thing is becoming incredibly tight. And over in J4X, you can see this thing is trying to aim down, kind of like the way the Euro was doing. It only got higher. If it had stalled out in this area, it would be very interesting. It did get higher from this daily buy, and it made a nice little charge up from it. And it did a good job from the daily buy, right there. You see that? Did a nice charge up, went into the daily buy there, moved up. Now, I guess we should have a little red line. Let's grab this red line and move it over to there, because it's been in a sell since there. So there we go. And you can see it's pretty much going down, up, and now sideways. And that's the action of it all. ACTION, action, action. We want action, but no, it's doldrums. This is summer doldrums, traders. So now, brown cow. Let's take a look at, let's see, that's the yen. Let's go over to, let's see, do we have a currency that relates to the metals? I guess the dollar, really, in some way. Cable with silver? I don't know. We don't really have a currency that we actually say, okay, this one interacts with it, because we call basically the metals a currency in their own right. So let's go over to the metals now. We'll take a peek at the metal market. And there's gold. You can see it's playing with the upper end of that range constantly. Up end of that range. You can see, look at that jagged move on the J4X. Look at that. It just keeps on fighting its way up every time. Every time it goes down, it finds a way to lift up again. And our gold is line 6. 4 weeks in a buy. Wow. 14 days in a buy. Yowzer. So now let's dance our way over to the old chart of gold. Gold. And there it is right there. And there is, there we go. And you can see there is the Chicago Quant chart right there. And let's see. I just need to go to their website for a second, or our website, my website. It's my website. I'm talking in the third party. I need to look at something first. I'll be right back. Okay. All right, I had to check something on the website. All right, so there you go. There, you can see this thing, lots of green dots, just like this thing is screaming up and trying to stay above the dashed line over on the J4X itself. And then you can see here, the daily's been in a buy since there. The weekly's been in a buy since here. And so it's got that upwardly trend going on. That's the magic of it all. We've been looking at silver more. We think, silver has been outperforming the gold. And we keep on thinking that that crazy sell-off down to 1171 has trapped some shorts or anybody that needs to get their hands back on the metal itself. We're thinking that that has some influence. Robin and I have been talking about that. We really think that that's got to be some type of battle going on there. I'm not sure. We talked about this yesterday and the day before. How could anybody liquidate silver so ferociously when the world was allegedly coming to an end by a pandemic that was going to kill off the world population? Okay. So there's not a lot of logic there. You have to assume right off it couldn't have been like a metals fund. I mean, why would a metals fund liquidate silver in the middle of a global disaster? So it had to be some type of hedge fund or mutual fund, or it had to be somebody that was really desperate for assets. That's what it really had to come down to. It just had to be something like that. And you would assume after the event, they're trying to reach up and bring it back, and now it's kind of built looks like it's trying to build a new range. So let's go over and take a look at the silver. It just has that look like I need a new range. And you can see here, we're thinking it wants to go up into the mid-20s. It's been trapped for half a decade underneath the 20s. And that distortion that occurred, let's put it on here too at the same time, from the coronavirus pandemic scare of those 5 weeks, they drove the silver down to 1171. And that says to me that something's brewing there. That's what that says to me. Let's remove that one too. Might as well fix it now, since it's fully the next day. And we will go like so. Like so. Like so. One of those. One of these does it. We'll go with that one. So it's saying to me that it's trying to lift. That's why I went right over to the Chicago Quant Technologies website. I needed to check something about the silver. I was like, let me see if it's really doing what it's supposedly doing, and it is. It's doing it. You can see it's trying to get to the top of the range. You can see here on the J4X, that looks like it built up a really nice base in the 17s, and so that crazy disaster down to here, that waterfall, whoever is liquidating the product, is probably has created a boomerang effect, and it's trying to now go the other way. It's trying to find a way to get back up, and probably since it broke the bottom end of the range and went well beyond the 1415 area, went down to 1171. Chances are is that the desperation will push them into the 20s. And that's why we're thinking that this thing wants to go up into the 20s, which has not. When you look at J4X, and we put a weekly chart up there, boom, 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 a weekly chart up there, and we go back, half a decade, you can see this product has had a really hard time. Back in 2016, it took it had this massive move from almost the low 16, high 15, up to the 21 area, low 21s. It was like a $5 move, and overall move from 13 and three quarters. That was six. It's like $8 move. So we're thinking that that 11, that $12 and an $8 or $9 move should put it into the low 21s. It should panic some people, and you can see this here. It's almost like a reverse head and shoulders. You would think that it's going to dance around in here for a while and then possibly get that move back into this zone. I think it's going to play with this stuff in here. I think it's going to take out at least the 21. What is that? Like 21 and it's like 21. Oh no, it's 20. It's 20 and change. I don't know. I just think it wants to play with this or this in here. It wants to play with the support and play around with the high end of the range. It just, the longer these money managers are scared, the longer these money managers have no direction, you would assume that they will slowly nibble away at buying more of this stuff, the poor man's gold, silver. So, it just has that look to it. And then when you look at J4X on a weekly basis, right here, look how strong that move is from it. It's an awful big, strong move up from that low. And that low was not seen. I mean, that thing has not seen that low since 2000. Was that 2000? Where is that? 2009. That was just a devastating slam in a pandemic. It'd be one thing if like unicorns had appeared and everybody was now going to live a wonderful life, and you didn't have to do anything the rest of your life because you were living a wonderful life, and you woke up every day like as if you're on, a combination of Viagra and, some type of drug that makes you happy all day long. So, I mean, it's the opposite. This move here was a pandemic. The world is coming to an end. Metals are bought solely for specifically that reason. The world coming to an end. Flight to safety. Hello. And where's the flight to safety here? Nowhere. So that is like that crazy little tick in the Turkish lira. It says something. It says something to me. And I've seen it happen many times before. And we're thinking that it's going to get this silver out of the range and moving up. That's exactly it. All right. Now, let's see where we at this point. No one seems to be interested in anything particular. So we will, let's see, where do we go from here? We go, what currency pair do we look at with this? Let's put this back to the daily. And so I think I already have the title for this. Trading in the Summer Doldrums. Or trading in the dead spot of summer. Something like that. So you can see that strength is kicking up in here. And what currency pair? Let's look on the currency pairs. Which one yells at us? I wonder what the Aussie dollar looks like, since it's a commodity country. Let's take a look at the Aussie dollar. There's Aussie dollar. Are we seeing strength out of that thing? It does have somewhat of a look to it, but it's been sideways. You can see that the product itself is 12 weeks in a buy. It was flirting with the weekly sell number. We even went and hunted down the weekly sell number right there. And we're 5 days in a buy. And this thing just keeps on pushing up. You can see here with the J4X. I don't know. We used to look at the Aussie in many ways as a commodity country. So, they have gold, they have, phosphates, they have, precious minerals. China was buying property left and right in Australia. So, I would think that the Aussie dollar could reflect. Now, I know that they're having their pandemic time because this is the dead of winter there, and I'm not sure how. The bigger question is not how many people have caught the corona. The bigger question is how many are dying from it. We're not really seeing anything there on the death side, but that could be one of the currencies we could look at. All right. Let's head over to the stock indices because no one's asking anything, and I don't. I'm just dancing through these pairs. Oh, you know what? Let's go from. Let's first take a look at. Excuse me. Let's take a look at the Euro Aussie. No, is it Euro Aussie? Where is it at down here? Euro Aussie. Yeah, let's look at the Euro Aussie right there. And this should be breaking down because of the stock market. Now you can see there's some firmness here today on that. Stock market's been going up, so this thing's going down. Now let's take a look at, say, the S&P 500, which reflects it more than, say, the NASDAQ 100. But we'll look at both of them. So there is the S&P 500. It's been probably moving up until today. And then, yeah, see, it's been moving up, and then yesterday sold it down. You can see the Aussie, Euro Aussie moving up. You can see this thing's trying to top out in here. This could be literally an A and an A, B, C, B, and then we're getting ready to do a C down to, say, the low 2900s area, or mid 2900s area. You know, no more than, I don't know, what was it, 4, 5, 6, 7, 8, no more than a week and a half ago, we were down there making an attempt at the high 29s. So, but the stock market does have that look to it, like it's trying to go. Oh, here we go. Hey, Daniel, how you doing? Daniel charting. Oh, you'd be interesting to. Oh, okay. You know what? Let's see if we can do something like that. I have an idea. How the quants work. Let's see. Okay, so let's go to. Let's see, where are we? I'm going to put something up on the screen, and then you'll be able to see the explanation for it. Okay. Interesting question. Let's take a look. All right. So now, let's see if that does it right there. How to trade the CQT. All right. So what we do is we have an example. You can go to our website and you can look at it. And what it does is it gives you a graphic. I'm not sure why it does that, but let's do this. So it gives you a graphic, how to go long. And so it explains how to go long, and it gives you a physical example. And then it shows you how to go short, and it gives you a physical example with explanations there. And then underneath that, it's in writing. That's it's, you know, it's not like a book you have to read. It's like, that's it right there. An explanation of how to follow the rules. And so just go to the Chicago Quant Technologies website, and you'll be able to see how to follow the rules of the quant trading. How's that? Does that make sense to you? And it's in the. Let me show you where it's at. Let's see, where is it at? Let me show you where it's at. It's in the. When you go to the Chicago Quant website, it has home. It has chart gallery. And then it has how to. So just go to the second button, and not today's charts, but underneath it, go to the how to. How to trade with CQT. The new illustrated user guides. It's a whole one page, but it has such examples. It's because it's that simple. Honestly, the following the Chicago Quant, for those that have been watching my work on the Dukascopy webinars, you know, have seen for years. It's just simple lines, goes through the zero line, you be long. The dots help to confirm to be long. You know, if it breaks down below it, you can be short. If you're in a weekly buy and a daily buy, you can be long overnight with no problems. You know, it's like an 8.5 out of 10 that you're going to be, you know, you'll make money. And if you use options, it makes it even a higher percentage. And then vice versa, if it's in a weekly buy but in a daily sell, like right here, it tells you to take your profit but not to go short because it's in a weekly buy. And so what you're trying to do is honor the longer term trend. This is for a day to day, you know, overnight thing, you know. Oh, here you go. Visit. Okay, Robin's filling us in now. There you go. And Daniel says, "Thank you. A link would be great Robin usually puts that thing up there. It's. I googled it. I actually googled it a few. I googled it last night for somebody. Someone was asking me the same question, and I went to Google and I actually punched in Chicago Quant Technologies, and our website came up. It was like cool. And it was on their computer, which means the cache didn't have it like sitting in there because I went in there, and so that's. But that'll give you the direction to it. And then what we've done with the J4X is we've found ways to emulate a lot of our work. Now it doesn't match it perfectly because it can't, because this is my magical numbers that have been back tested 36 million years and 90 years on the Dow Jones Industrial Average. 15, 20 years, I guess, in currencies, since the 1980s in currencies, and then using what they call baby galaxies and their thermodynamic expansion on the outer edge and how it increases in temperature and decreases in temperature. Our math predicts the increase and predicts the decrease, and it's not a bell curve. So in other words, it's actually predicting the top. So, we can say that our math has been back-tested 37 million years. And we used a reputable data from Lisa Randall, Dr. Lisa Randall from Harvard, the head of the physics department there. I used her work at Princeton University. She was presenting it to the physics department there, and I went to I was there, and I put my math to it, and there it was. So it's pretty much independent sources all over the place, but it does not reflect my math. I will not give you my math, but I will give you the results. And so the results are obviously more important as far as I'm concerned if you're a trader, because obviously when it goes into a green dot there and it starts to go, and at the same time that day, without seeing these days, now that the thing wants to go up in value, and it does. It goes up in value. It's just like looking at the J4X and seeing that this line is buried down here, breaks through the other two lines. It's a scream to say the thing wants to go up in value. Now, obviously, this is not going to help you out in this tangle in here, but it does help out in many ways here. It breaks through this line and this line, and it's telling you to be long. And then it comes up in here, and you're not sure if you want to get out of it. I wouldn't short it. It's a real dangerous thing to. I guess if you saw action like this, you would try to short it, but then you can see how much you can get twisted just one day down, and if you don't get out, you're in trouble. So with our Chicago Quant, that cuts out that heavy risk factor there. DuckDuckGo, what is that? That sounds cool. Googled DuckDuckGo. It myself found that info. Many thanks. DuckDuckGo. We're on what? DuckDuckGo? Robin, what's DuckDuckGo? That's cool. I like the name. Sounds like fun. So, yeah, that's where we are when it comes to trying to figure out this market. It's the summer dead zone, trading in the summer, dead of the summer. That's what we should call this webinar today. Trading in the dead of summer. And in the dead of summer, it's a tough market. It's going a lot of places nowhere. In other words, it doesn't follow through, and that's a real problem. That is a real problem, because people can get trapped in a position, see all the excitement, and then all of a sudden it's gone, and you're like holding the position. You go like, I know it's going to come back again. It's like I made money before. It's going to come back again. It's like, guess what? It's the summer, and so it's not. It just can go sideways, and that is the issue of us. These couple weeks before the end of July, going into the first few weeks in the of August here in the northern hemisphere, trading can be really it's a search engine. Oh, okay, cool. DuckDuckGo, huh? We'll check that out. Trading in the dead summer weeks. How's that? There's the title. Trading in the dead summer weeks. And so that's really where we're at the moment. So traders, be careful. Do not get married to any position. As I used to say, don't get handcuffed into a position. Where it's you get into the position, take your money and run. It could be like 10 minutes, 10 seconds, or 20 minutes, 30 minutes. Don't think that it's going to happen again. It could be just like that Turkish lira trade, where you see the spike, and then you got to imagine some of the longs there that pushed it up into the up, and then found it sitting back in the range again, like a half hour later. Probably were like, okay, yeah, I'm long now. I'm ready for it to pop again. It's the Turkish lira. It's going to pop, and it does nothing for 4 days. So that's the risk of the summer trading, and so I mean, I can't complain about summer trading. Summer trading's been great, but it is a challenge, always a challenge. Daniel says, I'd be interested in what China wants to do with the markets. Well, they seem to be stimulating it because they're really desperate at the moment. So they've been really pushing cash into the market. It seems they want to do the bull market of 215. Yeah, no doubt about it. And not a fan of CCP, by the way. Yeah, I agree with you. I mean, look what they're doing to Taiwan, and then look at the viciousness what they're doing to Hong Kong. I saw a really interesting story. What did they call it? The name of the river. They called it something like the mega city. There's like 3 cities. I guess it's the Portuguese one, where they have the gambling. Then they have Hong Kong, and then there's another city there, and they call it the mega city. The 3 of them together, and the CCCP or CCP wants to control them, and they're going to control them, and they're going to be tough on them. So that's where we are, traders. Let's watch out for a possible ABC, and this could be a move on the downside for the stock indices again. And if so, maybe it will put the push on the upside on the metals. All right. Anyway, this is Doc from North America. Catch you tomorrow on Thursday. Happy to hump day to yous, and happy trails to you until we meet again.